Let's say you walk up to a vending machine and slide in $2 for a cold drink. It is a simple, everyday trade. You get your glass bottle, and the Coca-Cola Company gets your money. But out of those $2, how much actually goes directly to the parent company headquartered in Atlanta? It turns out they take a remarkably small slice. If we break that $2 down, the parent company only collects about 6 pennies. That is roughly 6.25 cents per drink. The rest of your money goes to the grocery store, the delivery drivers, and the independent factories that actually bottle the soda. Which brings up a math problem. If they are only pocketing a few pennies from the drinks we buy, how does the Coca-Cola Company walk away with $36 million in pure profit every single day? To figure that out, we have to look past the individual cooler and zoom out to the entire planet. Across the globe, people consume 2.1 billion servings of Coca-Cola products every 24 hours. Trying to manufacture, bottle, and ship 2 billion heavy drinks every day would cost a fortune, so the parent company simply chooses not to do it. Instead, they rely on independent partners, called bottlers, for the heavy lifting, like delivery trucks and factories. The parent company's job is simpler. They manufacture the concentrated flavor syrup and sell it to the bottlers. By outsourcing the expensive manufacturing to these partners, those 6 little pennies they collect from each serving remain almost entirely as pure profit. Multiplying that 6-cent putt by 2.1 billion daily servings creates a towering pile of cash, $131 million in revenue every single day. But to keep momentum, they pour $15 million daily purely into marketing. That daily advertising budget supports 32 distinct billion-dollar brands, heavily promoting massive growth areas like their zero-sugar options. They also use that cash to capture different times of your day, taking a cut from morning coffees and afternoon energy drinks. They even capture revenue from the grocery store dairy aisle, driving sales for high-protein filtered milk products. They pull this cash globally. North America brings in the highest volume of dollars, but regions like Latin America operate as the most efficient profit centers, squeezing the maximum return out of every dollar earned. Bringing in $131 million before the sun goes down requires constant maintenance. They have to spend heavily, every single day, to ensure their massive portfolio of drinks stays at the very top of your mind. Once they finish paying for that daily advertising, the syrup ingredients, and their taxes, we reach the bottom line. The parent company clears roughly $36 million in net profit a day. Think about the scale of that for a second. That is pure cash added to the company's reserves day in and day out. However, having that much cash makes you a target. Right now, the company is tangled in an enormous legal battle with the U.S. Internal Revenue Service over how those global profits are taxed. Recently, following a court ruling, the company handed over roughly $6 billion to the IRS. To put that in perspective, that single payment wiped out 167 days of global profit. Over 5 full months of that $36 million daily grind instantly gone. And the trouble might not be over. Depending on how future court rulings go, they could be facing another $14 billion in unpaid tax bills down the road. It shows that even if you design your business to avoid the physical burden of factories and trucks, you can't escape the massive legal and financial risks that come with being a global giant. So let's go back to that brightly lit vending machine and those 6 shiny pennies. The parent company realized long ago that their true power was not in moving heavy bottles of liquid. It was in designing a system that lets partner companies do the heavy lifting, while they manage the iconic brand and collect a steady, highly profitable fee on billions of daily transactions. Next time you buy a drink, remember that you are contributing your own 6-cent daily tribute to the most efficient